G'day everyone, welcome to the weekend general update for the 11th of November. And in the week just gone, we've seen something that we haven't seen for quite some time, and that's the Australian market considerably outperform the US. The US dropped heavily, was probably the worst performing market in the world, I would say, and down about 3.5%. But in that time, the Australian market, if you take out the two banks, NAB and Westpac, that went ex-dividend, then our market was down by less than 1%, and there were many stocks that went up. In fact, Commonwealth Bank basically broke to a new medium-term high. So a pretty interesting week in a lot of respects, and gold did well and gold stocks did very well also. So let's have a look at a summary of the action. First of all, just a reminder about the general advice nature of all of this information. So the S&P ended up down a pretty big 34 points on the week, and it was due to a range of US issues, the concerns over this tax and spending changes coming up at the end of the year, what they're calling the fiscal cliff, the results of the US election. I guess the market was perhaps hoping for a Republican win. The economic data is generally pretty good, so that's not really the reason. I think also there may have been a little bit of the US market had done so well in the previous 3 or 4 months that there was just some profit taking. But look, other markets, other stock markets and other commodity markets and currencies as well are largely ignoring the decline in the US. So for me, it was a little bit of a recognition that the US market was probably fully priced and really just needed to come back a bit. Now the ASX 200 gained 2 points on the week, and resources are starting to outperform the others. Resources had been lagging quite dramatically, but as the fears about China start to subside, then resources definitely making a comeback. And also the small cap stocks in Australia did extremely well last week, so we'll have a look at all those charts shortly. Now the US dollar continues to rise, and it's now quite overbought. I don't see this as anything other than a technical correction in a long-term downtrend. So I don't think there's anything going to change there, and the US government, the US Fed, is desperate to keep the US dollar weak. So I think this is only going to be an interim situation. Now when it comes to the important bond yields in Europe, we saw both Spain and Italy, the bond yields rise a little bit. Spain getting back up towards 6%, and the Italian yields back up towards 5%. Now these are still much better levels than earlier in the year, and I think, you know, largely the fear over Europe has probably subsided for now. Gold rocketed back to $54 or $54 up on the week, and I'm really looking for a close above 1735. We got very close to it on a couple of occasions, but a close above 1735 would confirm for me that gold is based out and it's heading higher. Silver was also very strong. The correction looks complete in silver to me. We saw copper eased to about $3.43 on the currency impact. So really copper in its own right pretty much held steady. So that's a good indicator of the supply and demand situation for copper. And oil did get hit hard early. There's a lot of changes in the world energy market with all this shale gas that's been found in the US is changing things quite dramatically. But oil's still holding $86. So let's have a look at some of the price charts. And we'll start with the US dollar index. And you can see that we did have a consolidation phase here. It hit a low in September, largely tracked sideways for some period of time until the last week, and it's just moved up another level. But I'm looking at you know, probably 81 and a half to 82 is the area that's probably going to see it out, I think, and then we'll see the long-term downtrend resume. Now the S&P index, we had support at 1395, it went straight through that. The next support was 1370, and we got to a low on Friday night of 1373, so that's pretty close. We're pretty oversold on the S&P index now, so it may well be that that's the extent of the downside, but a bit more downside is still possible. Down to this 1346 area is still a possibility. The S&P index needs to get back up above 1430 and close up above there to really confirm that the correction is finished. So we'll keep an eye on that one. Now, interestingly, the VIX index didn't really, despite the very steep falls, the VIX index has stayed below 20, and that's pretty unusual. So that's indicating a level of complacency in the market. People aren't too worried about it. They're still seeing this as just a correction, and the market is probably going higher. If you look at the fundamentals around some of the major stocks, you look at a stock like Apple, for instance. It's been sold down about 24% in the last couple of weeks, and the fundamentals now are really extremely attractive. I mean, this is a company now that's trading on single-digit PEs. It's not like they're trading at very extravagant levels. So stock like Apple looking extremely cheap now in the long term. So that's another reason why I think we're probably close to seeing a bottom in the US market. Now the Australian market held up very well. You can see we just slid back a little bit a couple of weeks ago and then basically held that ground throughout last week. So very encouraging at the index level. And if we have a look at materials, you can see they had a pretty good week. They actually went higher. Now let's have a look at the overall index with all of the sectors. Just find the right one. There we go. So nothing has really changed in terms of the order here. We've still got healthcare and telecoms clearly the most robust. Finance has turned down a bit in the last week or so, and materials has really held steady. Energy's lost some ground. Small caps reasonably steady, so still doing pretty well on the small cap side of things. Now turning to gold. This is gold on a daily chart. We had support at 1692, which broke, then 1668. Now we got to a low of 1672, so within $4, and we've come rapidly back up. So you'll notice the RSI also reasonably oversold, and we got rapidly back up to the resistance from this little low point here. So this low from the 15th of October, if we can close up inside there, then we're back into the upper range again, and I think you could probably say the correction's finished. Now we did trade above there on Friday. We actually traded up to 1738, but wasn't able to hold it. But I think once we see a close over that 1735 level, then we're in pretty good shape with gold. Looking at it on a weekly chart, you can see quite a sharp rebound last week. And silver has also come back up quite sharply in the last 3 or 4 days as well. Now turning to the gold stock indices overseas, this is the GDX still in correction mode. 49.32 was the support area, and we got to 49.39 as a low, so within 7 cents. That's pretty close. And if we look at the other main gold stock indice, which is the HUI index, same sort of pattern, came back to this 38.2% level, and looks as though it's heading higher. Now we don't have a gold stock index in Australia that's charted in Market Analyst, but I can tell you that there are gold stocks that are doing exceptionally well on the Aussie market, as members will know. So in summary, I think we're looking for a bottom confirmation in the US. We still might have a bit more downside in the US market yet on the index level. We're looking for a close above 1735 on gold to confirm the bottom there, and things playing out pretty well, and I'm still very much of the view we're going to see a good rally into the end of the year. Now this is the overall chart for copper. Last couple of weeks it's just held steady around this 340 area. So in terms of the overall strategy, the US stocks, if they haven't bottomed yet, they're pretty close to it, but the Aussie market has been far stronger regardless, so it doesn't seem to matter that much if the US has got a bit more downside. And the focus very much on selected gold producers. That's really where the momentum is at the moment. Now non-resource stocks, there's some great companies out there, but there's a limited number of ones where there's still some value to be bought. So certainly some patience required in the non-resource sector. And many resource stocks are trading at single-digit PEs, and they are great value if this resource rebound continues. Now at this stage that's a big if. I believe the fundamentals have improved enough to the point where it looks like China has bottomed out and is heading back into an up cycle. So the fundamentals are really starting to look pretty good. A lot of the resource companies and mining service companies have got very robust order books. So things are looking pretty good at a fundamental level, but the market yet is unwilling to basically build the momentum back into these stocks. Outside of gold producers, nothing else is really maintaining momentum at the moment. But there's certainly some great value. So we've got terrific value in resource stocks, but no one's interested, and everyone's interested in the non-resource stocks, but they're all fully priced or overpriced in my view. So not a bad time to be just kind of patiently waiting and picking off the opportunities. So that's it for this week. Cheers.